Welcome to Buy, Hold, Sell. My name is Matthew Kidman, and today we have Roger Montgomery from the Montgomery Fund and Don Williams from Platypus. Welcome, gentlemen. We're on a sector today that has been on fire, healthcare. Good thematics, good growth, global companies in Australia. It's been fantastic. First one we're going to kick off with, Rog, is hearing company Cochlear.
Yeah, what an amazing export business for Australia, you know, fantastic company. We question whether or not the low rate of growth over the last 5 years in sales is something that we need to be concerned about, and whether or not that reflects an intensifying competition in the market. They haven't been able to penetrate the adult market, and the share prices run very, very hard, so I'd put a hold on it now.
Hold, too expensive, Don?
Yeah, I guess for us it's more of a sell. I mean, ironically, Cochlear produced their best set of numbers for some time in the most recent result. But I think the major issue for them is there's more competition in the market, other cochlear implant companies, but also there are hearing aids being developed that are taking some of their share as well. So we think the competitive landscape is pretty difficult for them right now. Okay,
well, let's get off hearing and get on to blood, CSL.
Well, we recently sold out of our CSL shares. It's a stock that we normally, 90% of the time it's in the portfolio. And I guess for us, we just felt it was a little bit expensive for the growth that they're offering over the next 12 months, and we think it'll track sideways or might even correct a bit in the next little while.
It's been a miracle stock, Rog.
Yeah, we own it as well, and we're currently in that 90% of the time that we own it, so we still do. The business itself, in its half-yearly report, it didn't normalise for a one-off legal expense of about $39 million. That would have taken the result from soft to reasonable. They may have done it, and I'm being a cynic here, but they may have done it to actually help their buyback program. And despite a lowish and modest growth in NPAT, I think because of that buyback program, the EPS growth will be pretty good.
Right.
And we've got it as a buy at the moment.
Okay, a company that's done even better, done better than Apple, done better than just about any other stock in the Australian market, is hospital operator Ramsay Healthcare.
Yeah, we own Ramsay, and I guess the point I'd like to make on Ramsay, anyone that can make a profit in France is a company worth investing in. So we've held Ramsay for several years. They continue to deliver mid to high teen growth in Australia, and they've turned around a relatively poor business in the UK, and we think they're likely to do the same in France.
Sounds like a buy.
It's a buy.
Too expensive for you, Rog?
I've got it as a hold at the moment. We do own it, and it's a business that's never ever been cheap relative to our intrinsic value estimates of the company. But as Don mentioned, this is a business that people often don't give the benefit of the doubt when they go into new markets, and they've got a natural ability, because of their experience in Australia, to operate in a very difficult cost environment and on low margins. In France, nobody thinks that they can actually achieve that, but given their experience in Australia, they'll be able to translate that to France. They've got the ability, there's an enormous brownfield and greenfield opportunity for them. They'll be able to reinvest capital at very high rates of return for a long time to come.
All right, how about its competitor in Australia and recently listed HealthScope? It's done very well.
HealthScope's obviously, again, it has the ability to reinvest large amounts of capital, circa $400 million in greenfield and brownfield opportunities, but they have a pathology business, and because of that pathology business, we think there's a business in the United States called Theranos, which will actually completely change the pathology market around the world, and it's a disruptor and it's a massive threat. Without the pathology business, we would like it more than we actually do. So
there's too much risk.
Too much risk, so it's a sell for us.
Sell. Do you like HealthScope as much as Ramsay?
No, I think there's quite a large gap between Ramsay and HealthScope. HealthScope's, in terms of the entire market, it's a well-run business, and you will get some growth there, but we think it's better to stick to the better business.
Here's a chance to plug your favourite in the sector. What do you like?
Well, our biggest position in healthcare right now is RESMED, has been for some time. And I guess they're in a bit of a sweet spot at the moment. Their current suite of products are selling very, very well. And on top of that, there's no real intervention by the federal funding authorities for about 18 months. So RESMED we think it has a clear view over the next 18 months to grow at at least a 15% rate.
A buy on that basis.
Buy, yeah.
you like something else in the sector?
Yeah, we liked RESMED. We've recently sold RESMED.
Can't have that one though. It's
No,
been taken.
no. So look, ours is SIRTEX. It's our biggest position in the healthcare space in the private fund. We've recently trimmed the position slightly because of the binary nature of the outcome from their trials. Having said that, this is a product, this is a feel-good stock to own as well because they're doing remarkable things for the longevity of people suffering from liver cancer. The share price today is about what we think it's worth based on a good but not great outcome from the trial results. And how do I measure that? It's based on the number of months of extension of life after the administration of the SIRSpheres. The worst case scenario is a halving of the share price if they just go back to selling SIRSpheres in the what's called the salvage stage or the salvage setting. So chemo hasn't worked, people become chemo refractory and they can extend their life by a few months. They will grow very, very large just on that, but there'll be a share price reaction which will be terrifically negative, and that's one of the reasons why we reduced the position recently.
So it looks like the healthcare sector, it's been healthy and it's going to continue to stay healthy. Thank you.